Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, since Wednesday's weakness, the market has fallen further for the Australian dollar, and now since staging a strong rejection after 5 attempts at 67.35, the market is now focusing back on the downside with the target of 65.1995 as preferred, given that the fact that the RSI has broken through the midway point. Along with that, the technicals for the MACD are also weak. We assess from 65.90 in case we do see a rebound, as the market was relatively firm once upon this challenge back at the beginning of March. The euro was somewhat negative after the market staged the rejection on Thursday and falls further on Friday as the dollar index, which measures the greenback strength against a basket of 6 major currencies, rebounded from 101.50 and settled at 102.75. Keeping an eye on that support that's seen around 107.35 as a break there would reinstate the downside back to a potential target of 105. So it is quite negative, and the technicals are weighing somewhat heavy as we look at the RSI as it now challenges the midway point. We can see that the challenge on the dollar yen at 129.80 was rejected and posted a weak dragonfly. In light of the pattern respecting this level, like previously, we got a hammer. So with the family of the dojis to support a bullish case, that is the hammer, and now with the dragonfly, could see further gains. I like the way there is divergence on the RSI, so therefore at the start of this week I believe that the dollar yen case should be in terms of a more bullish or correction coming into play here, and therefore could see a rise up towards 131 and maybe even on towards 132 as a potential target. Now, I did say in a week or so, the broader aspect is still towards that top side, anywhere from 134 up to 138 or even 142, but that's the broader aspect. But in the meanwhile, I like the way the market has responded off this key support level of 129.80. Let's see if it can continue. Sterling was weaker on Friday and took the challenge to the downside towards the region of 121.85, seen as a key point. A break there would give further scope to the downside. As you can see, we've had 3 challenges upon this level, and the technicals, like before, haven't quite broken the midway point, but weighing heavily on it. If we do see a break, then I'm anticipating a move down towards the region somewhere of 120.5 and reassess from there. Having taken the challenge for the 3rd attempt at the region of $2,000 for gold, the market has tumbled, and from there it's posing more of a threat, I feel, in terms of the recent safe haven demand is actually starting to diminish, and therefore we see a break for the midway point, which does look more convincing than it did previously. Then we may see a further slide down towards the region of 1,960, or maybe back towards the recent lows that were seen around 1,935 to 36. Finishing up with oil, well, it was very whipsawed on Friday after the market backed away on Thursday around that 72 region and now focuses back on the downside. But the full rejection on Friday may actually give some hope that the bulls are coming back into play as the technicals are firming up. So I'm not reversing or changing my call as of yet, and still look towards that topside challenge, somewhere around 72, 40, 60. Reassess from there as the market may actually move on towards the region of 74.30 as a potential target. Well, that wraps it for the start of the morning. Thank you very much for joining me. But as always, look out for the intraday report. I hope you enjoy the great start to the new week.